It's crazy. And so it becomes unreal. So when I say that the price of Bitcoin will easily, I think without even trying hard, go to $500,000.
Yeah.
My view on this cycle is fair value today, as you and I are speaking, is in the low 50s. That's a Metcalfe's Law model that Tim Peterson and others calculate. The halving does this amazing thing. So what the halving does is it changes the fair value. Well, why? Well, because if you think about it, the miners, their costs are fixed. Electricity cost, miner cost. And so when the halving occurs and the block rewards get cut in half, in theory, a whole bunch of miners have to go out of business unless the price rises. So what we've seen in every cycle up to this point is a doubling of the fair value to adjust for the decrease in block rewards. Makes sense. But that movement that's built in, hard-coded in the code from Satoshi himself, that code then attracts attention. And, it's not politically popular, but true. The vast majority of people who are traders happen to be male. Males have genetically, back to our long distance ancestors, the hunter gene, right? And so if someone were to walk by my door out there, right, I would look. And if it ain't moving, I can't see it. My wife says, get the ketchup. I go to the refrigerator. Honey, there's no ketchup. She walks up, grabs the ketchup. It's not moving. I can't see it. So my point is, once that price starts moving, all the traders, mostly male, pile in. And then the gamblers come in and the speculators and they lever up. And then we get to the overpriced level, usually 2.3 times the fair value. So let's say fair value this cycle, 50. We're going to double. But this time we're not going to double. So the miners can get compensated not just from block rewards. So maybe the fair value only goes to 80K. Okay, let's just be conservative, 80. Double, that's 160. We shoot right through 160, but we're not going to go as high this time, I don't think, because there's not as much leverage as the last two cycles, because they clamped down on Binance and FTX. So let's say we only get to 160 this cycle. Okay, then fair value will continue to accrete. The next cycle, we hit gold equivalence. And gold equivalence, which is about 6 trillion. Everybody says 12. No. Half the gold in the world is jewelry and chalices, and that doesn't count. It's the monetary value of gold at central banks and in those big coins that matter. So that's about 6 trillion. 6 trillion, divided by, call it, 15 million coins, because there's been some lost or stolen, gives you about a 400K price. And then we blow through that a little bit, and that gets us to the 500K. So I just think that's pretty easy over the next 5-6 years. And then the question is, quo vadis?
Bitcoin's price is poised to soar to $500,000 in the near future, buoyed by a tenfold increase in demand following the introduction of spot ETFs and the forthcoming Bitcoin halving, which will have the daily new supply of Bitcoin from 900 to 450. This reduction in supply is expected to cause the price of Bitcoin to surge dramatically. Historical patterns suggest that Bitcoin's price tends to reach its peak around 9 months following a halving event. This projection comes directly from Mark Yusko, who has recently discussed the significant impact of BlackRock's foray into the Bitcoin market. According to Yusko, BlackRock's involvement has not only altered perceptions, but has also paved the way for wider acceptance of Bitcoin. In his commentary, Yusko addressed the potential for government intervention in ETFs that hold Bitcoin, while highlighting the exponential growth Bitcoin has experienced, particularly after past halving events. He also pointed to a generational shift towards digital wallets and assets, which he believes will further fuel demand for Bitcoin and other cryptocurrencies. Furthermore, Yusko has opined that Vanguard's decision to shun Bitcoin could prove to be a major misstep. In the video segment that follows, we delve into why Yusko is convinced that, should historical patterns repeat themselves, Bitcoin's valuation could eclipse $500,000. Before we proceed to share clips from one of Mark Yusko's recent interviews, we'd like to encourage you to like this video, subscribe to the channel, and turn on post notifications for more enlightening content like this. Thank you for watching, and we hope you find the video informative.
Up until this point, we went from science project, right? That first 5 years where it was the first they ignore you. A bunch of nerds and geeks playing with your magic internet money, 2009 to 15, actually 6 years. And then we kind of got a little bit of adoption, some, normal people, I would say, started to buy. And it was the then they laugh at you phase. Aha! Nerds, geeks, play with your magic internet money. Last year, 2022, or 2 years ago, 2022, we entered the then they fight you phase. And Warren and all of those guys and gals, JP Morgan, Jamie Dimon, they're like, hey, we hate this because look, fundamentally, blockchain technology and Bitcoin in specific as the first use case of blockchain technology fundamentally disrupts financial services. The same way the internet disrupted media and commerce, the way the printing press disrupted the church way back when. So the question on the ETFs, BlackRock, 5 years ago, Larry Fink, it's an index of money laundering. It was definitely going to be approved. I started talking about it. And look, I was wrong. I thought he would be the only one to be approved. I thought they'd pull a really fast one and say, look, Larry's part of us. He's part of the group. And so we want him to be the king. And we want all the others that are upstarts, like 21 shares, which we own a piece of, and Bitwise, which we own a piece of. You guys can't play. Thankfully, I was wrong. And so they approved them all. And what it does is it goes from technology savvy people, young people, to myself and all my friends, right? The boomers. It's a boomer wrapper. The ETF is a boomer wrapper to get access to this fundamentally better savings technology. People say, but not your keys, not your coins. Fine. Not going to debate that. But here's the thing. Tell my 85-year-old dad that he doesn't own Bitcoin because he's in the ETF. You're never going to convince him that he doesn't own Bitcoin. He doesn't have to physically hold his keys to get the benefit of Bitcoin as a savings technology. Max Kaiser says, "Oh, they're gonna seize it all." Okay, let's go down that path. Let's say they tried that. If they were to seize all of the accounts at Merrill Lynch and Bank of America and UBS and everywhere else that bought this, security, it'd be a violation of U.S. law. So there'd be some ramifications. And you can say, oh, eminent domain for national security. Okay, let's see how that flies and how many votes you lose. But here's the problem. What does that do for the rest of us? We're happy, right? It's like Satoshi Nakamoto said, what happens when coins are lost or stolen? Consider it a donation to the rest of the community. As long as there's one left, it doesn't have to be one Satoshi, 1/100 millionth of a Bitcoin. As long as that isn't under the control of the evil BlackRock, the whole value of the network goes up, no matter how many you cancel. So I actually don't think they're in the business of canceling. I think Larry's in the business of making money, charging fees. And at the end of the day, this technology, I believe, is a superior savings technology. $1 million is a number that the average person can't really deal with. And like if I say, what's 2 times 2? Everyone on this, thing would say 4.
Yeah.
What's 17 times 23? That's been proven as the limit of human intelligence. The average person needs a calculator to do 17 times 23. Some people can do it in their head, but not very many. I mean, maybe if I really thought about it, I could, but not off the top of my head. When you start talking about exponential growth, that's when people really get messed up. Because the simplest example, if I take 20 linear steps, I'm at the other side of my office, right? If I take 20 exponential steps, I high-five you twice. And so when we start talking about exponential growth and we start talking about trillions. Like, we just approved a bill here in the United States, $1.2 trillion spending bill. $1 trillion. Like, you and I would have to sit here together for 31,710 years, which would be most unpleasant. You'd miss surfing, and I'd, miss my son's lacrosse game. That's a long time. And we got to spend $1 every second. That's $1 trillion. This is not the first time we had a ETF or ETN, right? The last cycle, when we went from 10,000 to 60,000, from November, kind of Thanksgiving, to mid-January, before the famous Elon tweet, that was all because of GBTC. GBTC, which is a trust, right, was going up about $10 billion. And that $10 billion has a multiplier effect. Remember, you led off that I believe this year-ish, more fiat will be converted into Bitcoin than the previous 15 years put together. So over the 15 years, there's somewhere in the mid 200 billions, I don't have the exact number, of fiat that's been converted into Bitcoin. Now we have a $1.3 trillion market cap, but that isn't 1.3 trillion getting converted, right? Some got converted at pennies on the dollar. Some got converted at 70,000. So that 300 billion number comes from, there's 30 trillion owned by boomers, okay? 30 trillion globally. It's invested at Merrill Lynch and UBS and all these places that had prohibited. And when the ETF was approved, they're like, I can't say that you can't invest in Uncle Larry. Well, Vanguard did, but Vanguard, look, I have friends who run Vanguard, and they made a calculated decision, I think mistaken.
Or error.
That they decided they want to be the one firm that says, I don't care. I have all the old people who are afraid of this stuff, and they have all the money right now. So it was a calculated decision. I think it will backfire on them long term, because what's going to happen, all of us, right? I am the second to last year of boomers. My wife's the last year. And boomers are 60 to 85. And we're all going to pass. And when we do, all of that 30 trillion is going to the next generation. And it is not going to stay at UBS and Merrill Lynch and Vanguard. It's going to go into the digital age. So we have supply and demand, okay? And we have a supply shock, right? Meaning that now we're going to have fewer block rewards. So there's less, new Bitcoin. So P0 and P1 is higher than P0. Well, then we're going to have a demand shock. That's partly the ETFs as they get approved and everybody rolls them out, plus the new ETNs. So now P2 is higher than P1. So there's no question this cycle could happen faster than previous. I think this Thanksgiving can be the best Thanksgiving ever, right? We're all going to be welcomed back. Everybody's going to love us again. And look, is it possible that it goes really crazy because the supply-demand imbalance is really big? Sure, because here's the problem. 7,300 Bitcoin needed to buy every day today, on average, only 900 being created. Okay, that's a problem. So that means someone else, someone listening here or somebody else has to sell, right? Well, I know I'm not selling mine. I know Pomp's not selling his, and you're not selling yours. So who's selling? Well, we found out the other day there was, a wallet from 2010, hadn't traded in 14 years. We sold 1,000. Not a lot, but 1,000. And everyone says, I'll never sell. Here's the thing. There's a price at which you'll sell some. Because here's the thing. The way the average person should think of Bitcoin is as their savings. So when do you spend your savings? When you need it, right? Do you have a college tuition payment? Do you want to buy a house? Do you want to start a business? So every week you should be buying. I was on CNBC back in 2018. I don't remember what it was. And the price while it was on the show, it was only 6 minutes, but it went from 10K to 8K. You always say that. I said, well, Yeah, I do.
Yeah.
Buy it today, buy it tomorrow, buy it next week, buy it next month. Don't buy it all at once.
Here's Mark Yusko sharing his insights on how BlackRock's involvement has transformed the Bitcoin landscape, the looming possibility of government oversight on Bitcoin ETFs, Bitcoin's remarkable growth trajectory, and Vanguard's conservative stance towards this digital asset. His analysis sheds light on the dynamic evolution of cryptocurrency, influenced by major players and regulatory considerations. Yusko highlights Bitcoin's journey from a niche project to a mainstream asset, potentially reaching unprecedented price levels as digital currencies continue to make their mark. For investors and enthusiasts looking to navigate the rapidly evolving crypto market, staying informed is key. Before we wrap up, a quick note for those eager to keep abreast of the swift-paced world of cryptocurrency and Bitcoin. Consider joining our community for the latest expert forecasts, breaking news, and in-depth on-chain analysis. If you found value in today's video, don't forget to like, subscribe, and thank you for watching.